And in case if it will go down, it can actually go up till 0.7455. Yeah, it's some. That's very true. Yeah. All right. So, and then I will try to buy it from here. I'm not going to sell it now. No way, because, well, we have already broken through this level here, as you can see. So this one. So let me try to make it a bit bigger and more visible to you. Okay, so this area has been broken up, you see. So now we do have a correction, so we will have a further up move towards here. So what can actually happen? So the price, well, the reason I'm leaving all these levels here is because they might be working still. So the possibility that the price will go up from here is quite high. So the correction can actually lead us to this level 0.75001, and then the price will bounce and continue its up movement towards 0.75797 at least. So it's highly possible here. Okay, so euro pound, what do we have here? Well, wanted to buy it, it did go up, but I thought that the price will go down a bit more. So I wanted to buy it of this level during the European session, and it didn't go that much down, basically. So now we see all these levels working very good, but well, let's see what is going to happen now. So I do expect a correction here. So at least this level will be hit, in my opinion, 0.83890, and then we'll be able to buy it from here. That's something what I can see here, at least. All right, so okay. Euro dollar, quite interesting one. It did go up, actually. I was expecting it to bounce from, okay, it was North American session, so these levels here, 1.1, yep, so these two, this area, okay, and it actually broken through it, and now we'll see what is going to happen. So we do see some noise here. We do see that this level has been triggered, 1.1015. The price has bounced back from it. So what we can expect that the price, well, basically it's already bounced from this level at 1.10, as you can see. So the up movement continuation is quite possible toward this level. As we can see, we have a few here, 1.1035, and then we can try to sell it around this area here. Right, so this is something what I'm expecting. So I'm not going to enter the market now at the moment. Do want to sell it. And I do hope that this level or this area at least will be reached before the price will continue its down movement. Fine with the euro dollar. Pound dollar, again the level is working, which is good. So what I do expect that the price is going to continue its down movement, but what I'm currently looking for, I'm looking for a better entry opportunity. So what can it be actually? So we do have this level here, and we do have a very kind of strong reversal area around here. So that's why I basically draw a possible move towards 1.315 area. Because it's highly possible that, you know, when there is lots of volume and open interest in the area, so it works as a magnet. So the price might actually go towards here, trigger all these stop losses that are above these levels here. So will give us a few weeks or something, and then we'll be able to sell it. Okay, don't want to buy it because the price can just simply continue its down movement. All right. And don't want to sell it until it will show me some kind of correction or something like this. Don't see it at the moment. Okay. Kiwi. Again, as you can see, still want to sell it. The price did go up today, but I still want to sell it. And what I'm waiting for new levels here. As you can see, so I do believe that this level will be broken, 0.70800, and the price will continue its up movement towards 0.711 at least, or 71, somewhere around here. So I will review my market conditions when this level will be broken, in case if it will. Not sure if it will, but it might. We never know. And what we are waiting for here is that the price will finally reverse and continue its down movement, which is visible. Let me switch to 1 week chart to have a look at what is happening there. And yes, as we can see, so we do already have some kind of a reversal here. Well, as we can see, every kind of third week might be a kind of a reversal one as well. So we do have like 3, 2, 3 week in one direction, and then we might the direction is possibly going to change. But for now, I am still looking for a selling opportunities here. And at the end of this week, when it will be closed, I'll review my view on the market, and possibly I will change it for a bullish. But for now, it's a bearish view on the market, and we are at this level here, which is 0.73. It has been triggered. The price has bounced. So now we do see some kind of a correction. So I do believe that the continuation of down move is very possible, highly possible, I would say. So that's something what I'm waiting for at the moment. Okay, let me. Fine. Okay, so we do have a high of previous week here. Not even here, but it was a bit early on. All right. But still do expect the price to go down. Fine. So what I'm waiting for, I'm waiting for one of these levels to be reached, and I'm looking for a reversal pattern on this level. So I have to see that the price is actually reversing at one of these levels. Then I will try to enter it using a limit order. Let me switch back to 15 minutes at least. Canadian. All right, so the price is going up. That's not the news, and it will continue its up movement. I do believe that the bounce is possible actually here. Well, we see that this level was respected yesterday, so what I thought that the price will, after this candle, it will go back to this level and will be able to buy it from here. But unfortunately, it didn't reach this level. So finally, it did go a bit further up. So it almost reached this level. As you can see, I'm not using forward points. So we can consider it as it was triggered, basically, this level here. And of course, if this level was hit, then our buying opportunity was around these highs here. So it was a good area to place a limit order. But, well, I personally wanted one of these levels to be hit first. So then buying it from here. So, but it does look like the price is going to continue and break through this level here. So watch 1.3245 and see if this level is broken or will it be reversed from here. So this is the level to watch at the moment. In case if the price will bounce off this level, then we might have a move down towards 1.316 and we'll be able to buy it from here. In case if not, then well, what can we do? All right, so this is just my style of trading, so that's why I prefer to wait and not to miss this entry, you know, than to just jump into the trade and hope that I'm right. Don't want to do it. All right, so let's go a bit further. It's Frankie's next. Just a sec. Frankie, yes. Frankie, all right, so what can we see here? Well, the price is in the range. It has been in a range, well, let's say the second days today. Do expect the price to go up, definitely. We can see a reversal pattern here around this level. Well, but the price is still below it. Well, it was closed below it. It's a 15-minute chart. And what do we see on 1 hour or 4 hour? Well, I would watch 1 hour. So we don't have any particular, I would say, reversal patterns here at the moment. Well, might have in the future, but not at the moment. So what can actually happen? The price can, well, exactly as it is shown here. So two possible scenarios. The price will possibly just kind of go up from this level where it is at the moment, or it will kind of go down till this level here, which is 0.985, 981, sorry, 981.98. So the price will possibly go down to this level and then we'll be able to buy it from here. Okay, we'll see. Don't really like this range, so my view on the market can be changed as well. So that's something what I don't really like. Don't see any particular patterns at the moment, so don't think it's a good idea to buy it at the moment. So let's have a look what is going to happen. Okay, good. Yen is going down. So currently I'm just looking for a better entry to participate in this down move. So what can actually happen? Well, as you can see, the price hasn't stopped yet and we don't see any reversal patterns. Well, it does look like a reversal pattern, but it's already below this level here, so we can't use it. If it was above it, then we were able to try at least. Like here, for example, I will make it a bit bigger. So for example, here we did have a reversal pattern, but we didn't have any confirmation. So that's why we didn't use this signal here. Well, I mean, if you want to buy it for a few kind of, well, maximum 1 or 2 hours, then it was probably a good idea to do it, but we didn't have a confirmation, so you just didn't have a chance of doing it. Okay, so what is happening now? The price will probably trigger this level here, 104,300 or something like this, and then it will just continue to go down, or it can possibly go up here towards 104.900 or 105.300. So what I do expect, I don't want to jump in here. I want to wait till the price will bounce back to one of these levels here. Knowing how the yen is moving most of the time, it's not actually possible here, but at least it will probably possible during the Asian session. So what can actually happen? The price will be in range or will just continue its down movement during the during the European session, but during the Asian, it will give us a correction or something like this. And then we'll be able to, probably it will be by the lower price, but with more chances for success, we'll be able to enter the market. So no rush, wait, and it will always give you some sort of an idea where to enter. Just don't miss it. All right. So waiting is good, but when you wait and then you miss a trade, then it doesn't make any sense. Okay, so it's Mexican. Still want to sell it. Well, I think that, well, it will be a last try here. Well, still, we'll see basically what is going to happen till the end of this week. But as we can see, the price is going up at the moment. So I'm waiting for this level, it's volume weighted level 18.868 to be triggered at least, and then I will try to sell it around this area here. Yes, with a long target, to be honest. So the first target will be just around here, 18.35, but then the price will possibly continue its down movement for a few more pips. Let's have a look at gold. So what do we see here? Okay. Well, let me have a look at my analysis here. What notes did I make about this one? Did I make? Gold. Yes. So what did we have here? Well, I did really like what I saw in the morning earlier. So I did like that the price has respected this level here, well, this area, as you can see. So it's a very noisy kind of and strong area, 1320. So we might have a reversal at what we see here. So you see, it's a 15-minute chart, so it's not, I don't know, as strong as it is on 4-hour chart or something like this. But what I want to see here, well, is a move towards down a little bit. Well, as you can see, well, I've predicted that the price will bounce on one of two levels here. So the first one is here, which has been working actually. Worked out this one, which is 1317.56. So the price has bounced off this level here and it does go up. But what we see here, the price is not moving that fast, I would say. So we still have a chance to for the price to drop down a little bit to give us a better opportunity to buy. So really want to buy it. So we do have a very good perspective on this one, and the price is above this level here. And what we see is that the price is going to go up till it's higher than this level here. So okay. So don't see anything at the moment, waiting for a price to go down a little bit, and then I will try to buy it around 1318.00, around this level here, possibly 1320. I'll see what is going to happen around here. The price can just simply continue its up movement. It is very possible at the moment. Okay, so now, as I've promised in the very beginning, so I kind of made first half about market. So I've spoken about my favorite instruments here. So, and now I don't see any particular signals at the moment, but that's fine. We'll give it another, let's say, half an hour at least. Then 4-hour candle will be closed and I'll see what I will possibly use or not on 4-hour chart. So we might have some good entries in half an hour, I would say. So 4-hour candle is closed, so that's when basically we can possibly see some good confirmed and firm entries, which is good. Okay. First, I want to tell you about risk management. So what it is actually. So risk management, this is something what you always must think about before you are entering a trade. That's what it is. So if you want to be a profitable trader, what you have to think first about is your losses. Second, you have to think about not losing your account. Third, so saving your account, saving from trouble. That's what I mean. So third, you must think about what are your risks per trade or per day or per. Again, what do I mean by trade? So everyone is saying like take not more than 2% a trade, but what it is actually. So in case if you are trying to diversify your portfolio in between few instruments, it means that you can count as simple as 2% per trade only if your instruments that you are trading are not correlated, no matter which way, negatively or positively correlated. So they must be non-correlated at all, or at least like less than, well, let's see, 30% correlated. Then it's sort of fine. So why do I tell this? All right. So what it means actually? It means that, for example, if you are trying, well, let's see the situation now. Gold, you see this pattern here. Well, you don't have the levels that I have here, for example, but you have this pattern here. And you think, well, it's a doji or spinning top, whatever you call it, and you want to sell it because it's a good pattern. I don't have any, let's say, confirmation signal, but that's fine. The pattern is so good, so I do believe that the price will go down. And you will see the same, let's say, in Europe possibly. Yeah, as you can see here. Then you will see the same in, okay, where can it be? It's possibly Aussie. Yes, sort of. So we do have a few signals at the moment. It's not a right signals or valid signals, but at least, well, we are making mistake and we don't know about it yet. So we are, for example, making mistake trying to enter the market with few instruments, and we are spending not more than not 5, but 2% risk per trade. So what it means, we are entering the market in, let's say we've heard about diversification something and we want to do it. So we are trying to diversify our portfolio, and then we are entering on 3 different instruments, risking 2% each. So what is happening? We are wrong. In case if we are wrong, it means that we are wrong in all 3 instruments. Why? Because they are correlated, for example. So if they are correlated and you are doing it, it means that you are wrong completely. And what is your risk? Your risk is 6%. So 2 times 3 is 6. So what it means, you can trade correlated instruments. You can trade few instruments at the same time, and they are not kind of full-time correlated, and we must know it as well. But to diversify your risk, you have to kind of let's say divide your risk on 3 positions in this case. So it has to be 2% per 3 trades. So that's your risk. So that's the right way of thinking about it. So when you are talking about risk management, it's not something you are just simply 2% and that's it. So that's the very first thing. So when you diversify your portfolio and you are making a few trades at the same time, so you have to diversify your 2% a trade for all these positions. So all these positions must be not more than 2% in risk. Then there is a possibility that only 1 position of them will be right, and you'll be able to make something, but others will be in losing kind of positions. So 2 positions will be closed. You will still have like half, or let's say 2/3 of a percent in your risk that will possibly kind of cover your losses that you've made on this percent. So on these other 2 trades. So what is finally happening? So you had 3 positions, but you've split this 2% for all of them 3 positions, you know? And well, the maximum you are losing is 2%. So that's what is about 2% per trade. What is actually per trade, if you can call it this way, and how to use this diversification. Because the thing is that sometimes we would like, for example, to trade a bit more aggressively, or our, let's say, system is giving us a very good kind of results. So we wish to trade, let's say, 5-7% risk. So in this case, it's really dangerous, and you must understand what diversification means. So when, for example, well, I know some guys, they're risking like, let's say, 7% at the rate. But what they do, they rather no diversify at all, or they split their kind of 7% onto 3 or 4 trades. Because if you will not split it, then you will have like, let's say, 21% risk. In case if your risk per trade is 7%, then you will have 21% for 3 trades, you know. And if they are all wrong, then you will lose 21%, and it's almost 1/4 of your account. So it will be really hard to kind of make it back. So I do know that all of us, we want to make one good deal, and to triple our account in each day, you know, but it's not unfortunately happening all the time. And we all must know it. So guys, think about it this way. Again, so what I've already told you, it's a risk per trade, what is actually per trade, and what is diversification, how to use it in a correct way. So if you don't want to kind of be a gambler here. Okay, now what we have. What does it mean, risk per trade? Okay, that's all fine, we all know it, we are ready to risk, etc. But what it is, it means that our stop loss, no matter where we are going to place it, must be not more than something what will kind of kill only 2% of our, or 3% or 7% of our account. So that's something what we have to count in the very, very beginning. So we have to think about how much we can possibly lose in the very beginning. And when you think about this, you have to think not about two things like diversification, 2%, but also a stop loss. Without stop loss, don't enter the trade. If you can't trade with stop losses, don't trade. It means that you can't do it and you don't know how to. Okay, so you must have a logical stop loss. What can it be? Well, if you don't want to use a structural stop losses or something like this, then one of the very, very good instruments is very good instrument is ATR. I'm just trying to find it. It has to be somewhere here. All right, so I will ATR. So if you don't want to use anything else, you don't want to think about where to place it or not, so then you can just simply use ATR. It's average true range of 14 previous bars by default. So for example, for now on 15-minute chart, if you are trading 15-minute chart, then what we see here. So we see that current ATR is, well, let's place it 8. I normally kind of round it out, so round it up. So basically the 10 is the closest, so it's 10. I would consider it to be 10. So my stop loss for this position, in case if I will try to enter it long, will be like 30 pips, and it will be just here. That's it. So this is where the stop loss for this position, if you are trying to enter it. That's it. So you don't have to think too much about it, where to place a stop loss. Will I be right? Will I be wrong? I mean, if your stop loss is triggered, it means that you were wrong, no matter how long your stop loss was. Was it 30 pips, 20 pips, 15 pips, or 100 pips? The stop loss will be hit sometimes. It's 100%. I've never seen a system where no one has been using stop losses and, well, they have never been triggered. So the only rule is that your system must be able to cover this loss. So when you are using it, you must be sure that within, like, let's say one trade or a couple of free trades or something like this, your losses will be covered. Okay, so now we know how to place the simplest, the stop loss. Then you kind of, if you don't know how to use stop loss, where to place them, use ATR by default, this 14, etc., and use ATR times 3. That's it. So that's what you have to do. Okay, so that's about stop losses. So they must be on the chart. If you don't see a stop loss, then you have two choices. Close your trade, get the book, I don't know, any book where there is something about losses, and read it carefully and try to apply. Until you are profitable, please don't, until you're profitable on demo account, please don't trade with real money. Or you can just trade with something what you can actually afford yourself to lose. Okay, so now we know how to place a stop loss. Well, the simplest way, very easy to understand, and without any kind of special logic around it. So just it's a good way to place a stop loss. So ATR.3, that's it. Or what you have to remember, if you want to know more, then you can just read books, buy some courses or something like this, whatever. Okay, so now we've all probably heard risk-reward ratio. So what it is, you must be able to make more than you will possibly lose, etc. So risk-reward, again, is possible only in case if you are using stop losses. If you are not using stop losses, then risk reward is not there, it's not possible, and you won't have an edge at all. The only thing when you are able not to use a risk reward ratio is if you are a simple investor which is not using any kind of margin. So if you're not using margin and you are trading like one-to-one, and you just want to, for example, for some reason, due to the interest rate or something, you want to buy a certain currency and you just want to keep this currency like until the interest rate will be changed one day, 1 month or something like this. So it will be like at least for half a year, for a year or something. You are not using margin there. So you're not kind of using 1 to 10, 1 to 100 or something. You are using 1-to-1. And it's not necessary is made with a broker. It's made with a bank. Well, Dukascopy is the bank, by the way. All right, so what it is. So now I guess that you do understand why a proper trader always must have a stop loss and take profit as well. And take profit, original take profit, when you are counting the level, when you are counting the possible scenario, or something is going to happen, blah, 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 you are trying to enter it with a buy stop order, let's say limits order, buy limits order, or something like this, then you are counting where is your possible buy stop, take profit, where is your possible loss. When you know it, then you are able to kind of, expect something from the market, that in case if you are wrong, and this is something what you always must do. So before you entering a trade, this is something what you always have to count. If your risk-reward ratio, original risk-reward ratio, I'll come back to it, is positive, then you trade. If it's not positive, then if it's negative, then you don't trade completely. So it's wrong. It's wrong entry completely. So for example, if you want to place your stop loss around here, buy stop around here, and your target is around here, then it's wrong completely. So the possibility is high that it will be reached, but in case if it won't, and your buy stop will be triggered, and then your stop loss will be triggered, can you imagine how many trades you will have to make to cover it? So, okay, what shall we think now? So why a huge stop losses is a mistake, like 150 pips, let's say 200 pips or something like this. Why this kind of stop losses is a mistake? Because moves for 300, 500 pips, they do sometimes happen, but not often. So basically, you must be real with the instrument you trade, and you must know how volatile the instrument is. What kind of time frame do you trade? and what is an average swing size. So in case if the swing size is, for example, 50 pips, so that's something what you can actually expect in case if the swing is not correctional and you thought it will be um, impulse swing. So then what you have to do is, let's put it this way, third of a swing is your stop loss and the total swing size, or let's say 90% of the average swing size is your target or something like this. So that's another way of putting it clear, of making it clear that you can understand that what shall you think about. So you can't just leave an order here buying with 10 pips and making 100 pips in case if this is not normal for this instrument. If the instrument is doing 100 ticks or pips or whatever in average, then and you want this instrument to do it, then you're just wrong, and that's it. So again, that's good. So for now, I guess that you do understand what is risk reward, what is stop loss, and where the take profit roughly have to be. Well, you can use all these structural things, etc., but that's something very basic what you can implement right now into the market, so you can use it. Okay, so when we have all this, what is left? Have you ever found yourself in the situation when you done everything correctly and your position was showing you a profit for a while, but then your stop loss finally has been triggered? So that's something what makes you not to be addicted to risk reward as some traders basically are. So what I'm trying to say to you is that if your risk reward is good, it doesn't mean that you have to be addicted to it. So this is something what you have to originally think. Originally, I mean, while you are making this decision, shall you trade or not? So you must have a plan, but you always must have a plan B. What in case if you are wrong? For example, here we are trying to buy it, for example, from here in case if this will be broken and our stop loss will be just below this level here and our target is here. But as we can see, the previous level was at 0.75482. And what if the price will bounce off this level and go down? Shall we wait till we are wrong or right? Or shall we close half of the position? And in case if our stop loss will be, well, of course, our risk reward will be different. It won't be like 1 to 3 or 1 to 5 or something like this. But it will be, well, let's say we'll destroy it. And if we are right, it will be 1 to 1. But if we are wrong, then our position is 0. So we are not losing here. So that's something what you have to master yourself, because there are so many different approaches of doing it. So you can have 3 orders at the same time. Well, each order will cover the losses of the other. You can have one position and close it conditionally on the levels reached. So you can use a break even or something like this. So you can use a break even when the price has gone in your favor for at least 30% of what you have been expected, or 50% or 25% or whatever. So this is something you have to master out, but please don't be addicted to risk reward as some traders are. So don't do it. This is wrong completely. I mean, it does mean that you're, it is possible that your trading in a long run will be profitable, but it doesn't mean that you will feel yourself kind of correct. You know, this comfort is very important when you are trading. So if you feel yourself comfortable and confident, then you are good and you can trade over and over again. You can handle your losses. You can feel yourself good about profits. You know what you are doing. Your system is giving you money, giving you profit all the time, etc. So this is something you always have to think about. So don't get addicted to risk reward. Your target might not be uh, triggered and you are possibly wrong as well. So no matter how experienced you are, you can be like 30 years experienced, but there will be some times when you are wrong, definitely. So there is no trader on the planet who is right all the time. Even those guys who are in history used to do like 100 trades with no losses, they will have one loss at least sometimes. So if no, you are not using risk management, then this loss will destroy all your profits, believe me. So stop loss is something you must know how to use, where to place it. It cannot be big, or only it can, let's say, well, I've heard an opinion that trading in foreign exchange, you have to have a stop loss for 150 pips at least. This is completely wrong. I want to say rude words, but I'm not going to tell it here because nobody is going to like it. All right, so what it means, that's 150%. If you expect your risk reward ratio 1 to 3, it means that you are expecting for 450 moves. So how many moves for 450 pips do appear on the market? I mean, occasionally, of course, they do appear. It's a good move, and you're lucky if you got this one. But how many times in real life they do appear? Not many at all, guys. And you know what? I don't know what these guys are thinking about when they are actually trying to teach you and they're giving you this information. But it's just, if you're wrong in your entry, and that's it. You must take it, handle it. If you're wrong, well, take this loss. If you can't take the small loss, it means that trading is not for you. So, okay, if you decided to trade, then master it out. So you have to be a master of what you are doing. All right, guys. So now I want to talk about one very, very good thing, which, well, people are calling it hedging. So this is something, well, I've tried it a couple of times in the very beginning of my trading career with a hope. Well, I'm telling you, it was a hope. It wasn't like a proper trading or something. It was a hope that there will be some certain area on the chart where I will be able to close one position in profit and another one in, let's say, profit as well. Well, later on, something. One position is covering another one, etc. So what is happening when you are doing this kind of hedging? Well, let me tell you what is hedging and what it is for and why the banks are here, why some brokers are giving you options, futures. So these are the hedging instruments, actually, especially the options. So I'm talking about the classical options, so American style. Let's put it this way. So for example, you are trading with ruble. So your currency with ruble, Russian ruble, is jumping all over the place, and you are selling them something, but the ruble is going down. So what do you have to hedge? What do you have to hedge? So you have to sell your stuff to them and buy your stuff from them at the same time? No. So that's what basically people are doing here on the market. So it's just a nonsense. And this is something what brokers don't like at all, basically. And there is a reason for it as well. So what is actually happening? So when you think, Well, when you count your profit, so for example, you have a contract with the Russian, let's say, Russian company who is willing to buy a stuff from you. So you have to create this stuff for them, your manufacturer, for example, and you are counting your profit now. So what you must hedge? You must hedge your position for now. So it doesn't mean that you will lose or you will, let's say, you will lose or you will kind of win. You don't know it. You don't want lose or win. You just want to get your money that you are expecting at the moment for an additional cost, of course. But this cost is your security. This is what is hedging for. So you are trying to hedge your position, which is basically formed now and the contract is signed now, but you are going to sell them the ready-made product and you will get money for this product in half a year. So for this half a year, you have to make sure that no matter where the price of the currency will go, you'll be all right. So you'll still make money. That's why you have a price for a hedging and you are ready to pay it. And why you're ready to pay it? Because you want to make this money and you're ready to pay this kind of amount for making this kind of money. So that's what the hedging is for. Those guys who are trying to lock the position, mess everyone around, this is only possible if you don't know what you do on the market. And if the guy is telling you that locking is good, it means only one thing, that this guy doesn't really know what he's doing on the market. Maybe he's a beginner, maybe he's gone through some bad things on the market or something like this, and he's trying his new way of kind of saving the positions, etc. But locking is wrong. Why it is wrong? Let me explain. For example, here, you've decided to buy. Well, let's wait for this candle to close above this level, then we can place a limit order around. This is actually a true signal at the moment, so it's Aussie dollar. We do expect it to go up. Well, as you can see, so well, in case if it will go down, then we'll have a very short stop loss here. So we have to wait till we have to see what we can see on 4-hour chart, by the way. So this 4-hour candle will be closed like this. It doesn't look like a selling candle, to be honest, for me. So on 15-minute chart, what we can wait for. So when this candle will be closed, if it will be closed like this, then we'll be able to place a limit order at 0.75210 with a target here 0.758 and stop loss. Well, let's place it 3 ATR 0.3. Well, I will place it just below this level here, but you can do whatever you want. Okay, so my risk reward will be, let me count it. Okay, so risk reward 2.4, which is fine. It's not brilliant, but it's fine. And we can do it. And look what is happening. So what these guys are saying to you. So when you lock your position instead of having a stop loss, then you lock your loss. You see? So you will have a loss here. So when the price, in case if you are wrong and the price will go down, you've decided not to use stop losses, you've decided to lock your position here, it means that you've decided to keep your loss. That's the only thing what it means. Do you really think that you'll be right the next time when the price will, for example, go? Are you sure actually that the price will go down from here? No, you are not sure. You can't be sure. No one can. So even if you are lucky and the price is going down, are you sure that it is going reverse from here? Or what will happen? The price will show you a bouncing signals here. Then you will close your winning position for your losing position to kind of give you some profit later on. But the problem is that what if the price will continue its down movement? Then what will you do? So you'll decide, okay, I have another area where I will lock again. Okay, I'm going to lock here. So the price is going down. You're trying to lock again. Your loss is doubled now. Your loss is doubled now. And you think that the price will continue its down movement. Otherwise, why shall you lock it here? If you are wrong, you have a new losing position. So when your first position will be in profit here, another position will be in loss. So what will you do? Will you wait for another reversal? So can you imagine how much you shall know about market and why you cannot actually do it? This is something you must forget about. Okay, guys, so it's time for me to wrap up. I do really hope that you have heard what I told you and you will never do it. Okay, guys, have a good day. Have a good trading, brilliant trading. Thank you for your all being here. And I do hope that these basically advisors will help you to trade profitably. Okay, guys, thank you. And I'll see you later tomorrow. Bye bye.